Hi everyone, welcome to ACCA P6 video lectures. If you could come to page number 85 of your lecture notes, please. We are going to look at closed companies. Now, when we studied one of the previous topics, I think it was in entrepreneur's relief, just to make your life easy, at that time we did not need the definition of a closed company. So that's why I did not get into the details of closed company. However, now because we are studying the corporation tax, so we will now look into the details of what a closed company is. And this definition applies throughout the P6. Alright, so this is the same definition for closed companies throughout the P6. Earlier, I told you that closed company is a company which is owned by close family members. Now we will see the exact details, exact definition of a closed company. Now, closed company is a company which is owned by 5 or fewer shareholders or any number of directors. Now, when I say directors, they must have shareholding as well. Right? So a closed company is a company which is owned by 5 or fewer shareholders or any number of directors. Right? Now, it says in the notes, if you come to page number 85 of your lecture notes, please. It says broadly, a closed company is one that is under the control of either 5 or fewer shareholders or any number of its shareholding directors. Now, shareholders and directors, these are known as participators, and if there are any direct relatives or business partners of the participators, they are known as associates. Right? So shareholders and shareholding directors are known as participators. Direct relatives and business partners of the participators are known as associates. Now, when a closed company, which is a closed company? A company which is owned by 5 or fewer shareholders or any number of directors. Now, when a closed company makes a loan, issues a loan to one of its participators or an associate, it must make a tax payment to HM Revenue Customs equal to 32.5% of the loan. If the loan is repaid, HM Revenue Customs will repay this tax charge. Now, what is happening here is HMRC says that whenever you are issuing a loan to one of the participators or the associates, just make payment of 32.5% of the loan to me. Now, this 32.5% is exactly the same percentage for the dividend, so it will be assumed as a dividend. So we will take 32.5% of the loan which was given to the either participator or the associate, and that will be paid to HM Revenue Customs. Now, when the participator or the associate gives the loan back to the company, HM Revenue Customs will give it back to you as well as a company. Right? So when all or part of the loan is repaid by the participator to the company writes off or part of the loan, the company can reclaim all the corresponding part of the tax charge paid over to HMRC. So one condition is that when the candidate has paid you, the candidate has paid the loan back to you. Another one is he showed you the intention that I won't be paying back, just deduct it out of my takings. Then in that case, the company will have to write it down. So when the company writes off such loan, in that case as well, HM Revenue Customs will pay back the 32.5% of the loan, right? So which were earlier paid to HM Revenue Customs. Right. After that, it says if the loan is later written off, then the amount of loan written off is treated as participator's dividend income, so it will be considered as dividend income, and that's why the HMRC was taking 32.5% of the loan and is included within his income accordingly. Now, say for example, sometimes the benefit is given to the participator or associate. Then in that case, if the participator or an associate is not an employee, now whatever the benefit is given, say for example, if the car benefit is given, we will calculate the car benefit as we calculate in our income tax, right? So there will be, we'll see the CO2 emissions as well. Then we will apply that same formula which we have learned in our income tax. Now, whatever the amount of benefit will be of the car, now that will be considered as dividend. Now, that will not be considered as the normal income, non-savings or employment income. That will be considered as dividend, assuming a benefit is provided by a closed company to a participator or an associate. Now, benefits, it says, e.g. a car given by a closed company to a participator and their associates who does not work for the company are treated as receiving dividends from the company. The amount of deemed dividend is amount equal to amount calculated on the normal benefit rules. Alright, so we will calculate the benefit normally, like we normally calculate, and that will be considered as a dividend. Right? Right then, so let's do a past exam paper relevant to that, past exam question paper. Now if you could come up to question number, just bear me 1 second. Right, if you could come up to question number 28 of your BPP exam kit. It was examined in June 2014 and question name is Bamberg. Right, so question 28 examined in June 2014, question name is Bamberg. Right? Right then. If you have any other exam kit, please open up this question. It was examined in June 2014. Now we're only going to do the part C of this question. In part C1 it says prepare calculation to determine whether it would be cheaper for Bamberg Limited to pay Charlotte a bonus or a dividend such that she would receive £14,000 after the payment of all personal taxes. You should assume that the employment allowance has already been used against the employee wages. So what we have to do is we have to calculate the cost for the company, and so the company is paying £14,000 after tax amount to the employee, right? So what would be the cost for the company in this case? Now let's read the question then. In the question it says Charlotte is UK resident and domiciled, owns 100% of the ordinary share capital of Bamberg Limited, earns a salary of £46,000 and has no other income. Right, has two ideas to generate additional cash in Bamberg Limited. So she's already receiving £46,000 and she wants to generate additional tax, but she has only two ideas, so we'll have to incorporate one of these. Now wants to receive additional £14,000 after payment of all personal taxes from Bamberg Limited on 30th of June. Now Bamberg Limited is a UK resident trading company, is registered for VAT, has budgeted sales revenue, blah blah blah. Then this information is only relevant for the VAT purposes, so we haven't studied the VAT anyway, so we'll move on. Then Charlotte's ideas to generate additional cash in Bamberg Limited. Now Bamberg Limited should join VAT scheme, then Bamberg Limited should sell this machine. So let's move on. On the next page, alternative method of extracting an additional £14,000 from Bamberg Limited. Now these are the alternative methods. So Bamberg Limited pay Charlotte a bonus, and Bamberg Limited pay Charlotte a dividend. Bamberg Limited to make an interest-free loan of £14,000 to Charlotte. Right, so there are these three options. So in the first one, it says that what would be the cost for Bamberg Limited to pay Charlotte a bonus or a dividend. So we do not have to incorporate the interest-free loan. That will be, say, requirement C2. So we only have to consider the dividend and the bonus. Right, so let's calculate the cost for the which company is it? Bamberg Limited. Right, so if we start doing the question on the board, so that is cost of Bamberg Limited. If bonus is paid, so first we will do bonus thingy. So if we will do the bonus first, then we'll do the dividends as well. Now in the case of bonus, she wants to receive £14,000 after all personal taxes. Right now she is already receiving £46,000 of salary, annual salary of £46,000. So which means that she's already a higher rate taxpayer, and the higher rate of tax is 40% in the UK, as you know. Right, so she will have to pay that tax as well, along with the national insurance contribution as well. And for national insurance contribution as well, if you go and check the national insurance contribution rates, over £45,000 of the salary, the national insurance contribution rate is 2%. Right, so in this case, 40% is income tax and 2% is national insurance contribution. So what she have to receive is, so she should receive £14,000 after these two taxes, right? So let's see how much it becomes. So let's take £14,000. Sorry, let me do it beneath that. So £14,000 times 100 over, now how much tax she has to pay? She has to pay 42%. So if we deduct 42% out of the 100%, it would be how much? 58%. So let's divide it by 58. Right, so 24,138. So this is the bonus paid to Charlotte. Now that is the amount which will be paid to Charlotte. Why we are paying 24,138? Because she wants to receive £14,000 after all taxes. So she has to pay taxes as well. So she will receive 24,138. So the company will pay her 24,138, and she will pay some taxes as well, national insurance contribution and income tax. What she will eventually receive is £14,000. All right. So that's why I've taken 58% here, because she has to deduct the 42% tax, 40% income tax, and 2% national insurance contribution as well. So she will get 58%. Now if we take 24,138 and multiply by 58 over 100, it will come to £14,000. So that is the amount which will be paid to Charlotte. Now the company don't only have to pay this amount, but also have to pay employers' national insurance contribution as well, right? So because we are calculating the cost for Bamberg Limited, so we'll calculate employers NI, and that is 13.8%. So we'll take 24,138 times 13.8. That comes to how much? Let's see on the calculator. So that is 24,138 times 13.8%, 3,331. So that is 3,331. Let me do it again if I have done any mistake. It's 24,138 times 13.8. Yeah, 3331. Yeah, that's fine. Right. So that is the total cost for the company. 24,138 plus the national insurance contribution, employer national insurance contribution. And please remember, in the question it was told that the employer's allowance is already been used, so that's why we have not deducted employer's allowance. All right. Otherwise, if it would have been only employee or the first employee, then we would have deducted the employer allowance as well. Even because in the question it specifically said that it has already been used, so that's why we haven't deducted the employer allowance for the national insurance contribution. Right, so that is a amount 24,138 plus 3,331. Total figure comes to 27,469. 27,469. So that is amount which the company will bear during the Bamberg Limited. Now that would have been the amount which the company will bear, but however, because the company is paying this amount 27,469 to Charlotte, so this is the money coming out of the company. Now when this money is coming out of the company, of course the company is saving corporation tax on that. So company will not have to pay corporation tax on that. So the company will be saving corporation tax on that amount. So corporation tax saved. So that is for corporation tax saved, and it is going to be 27,469 times 19%, which is official rate of tax this year. So we'll have to take 19% of that. 5,219 will be deducted out of that. 5,219, and if we deduct this amount out of 27,469, it comes to 22,250. Right, so 22,250. Right, so that is the cost to Bamberg. Cost to Bamberg Limited. So that is cost to Bamberg Limited for paying the bonus, if the company pays the bonus. Right, so 22,250 pounds. Now coming back to the coming back to the question, if the company pays the dividend, say for example, and the company is paying the dividend of this same amount, which is the amount £14,000. Now if the company pays the dividend, so let's do it here. Dividend paid, because we have to do the two calculations, one is for dividend, another one is for this one. So if the company pays the dividend, in that case we know that first £5,000 is tax free for the individuals, assuming that she does not have any income of dividends, because we haven't given any in the question. So first £5,000 will be tax free. So according to the nil rate band, every individual will get the nil rate band of £5,000. So there won't be any tax. And on top of that, so remaining amount, so 14,000 was total amount, 5,000 has been deducted, remaining amount is £9,000, and £9,000 we know the tax rate is 32.5%. So 100 divided by how much? So if we deduct 32.5% out of 100, how much would be the remaining? 67.5. Right, so let's do this one as well on the calculator. 13,333. Right, so that is the amount she will receive after paying the 32.5% or £9,000. Right, so what would be the eventual amount which she will be receiving? So now she will receive 13,333. Charlotte will receive 13,333, and she will also receive £5,000, because on which she will not have to pay any tax at all. Alright, we have taken this amount 13,333 because she had to pay the tax on that. On £5,000 she will not have to pay any tax on that. So that's why we'll take exact £5,000 from there. So total amount is going to be 333, so 18,333. So this is the amount which will be paid to her, 18,333. What she will eventually receive is £14,000, and that is the cost of the dividend. Right? Now if the company pays bonus, cost to the company is 22,250. If the company pays the dividend, the company has to pay 18,333. Now when the company is paying the dividend, we will not have to deduct the employer's NIC, because there won't be any on the dividends, and also we will not deduct the corporation tax savings, because dividend is always paid after the corporation tax. So that's why we will not incorporate these two things. Anyways, now these are two options. If the company pays bonus, the cost to the company is 22,250, and if the company pays the dividend, amount will be 18,333 to the company. Now coming back to the question, please. Now in the question part C2, it says, if you come to part C2, it says what? Explain the immediate tax implications of Bamberg Limited and Charlotte of Bamberg Limited making an interest-free loan of £14,000 to Charlotte. Now in this case, the company is paying the loan. So there was a third option as well. The company is paying interest-free loan of £14,000 to Charlotte. What would be the implications for Charlotte, and what would be the implications for the company? Now for Charlotte, we know that the implications for the company would be, we'll take £14,000 loan multiplied by the official rate of interest, which is 2.5%. So that will be considered as benefit for the Charlotte. And as far as the company is concerned, because this company is owned by Charlotte only, 100% shareholding, so it is a closed company, isn't it? Now closed company is a company which is owned by 5 or fewer shareholders. In this case, there is only one shareholder, so that's why it is a closed company. And whenever the closed company gives a loan to its participator, in this case Charlotte, then the company will have to pay 32.5% of the loan. So 14,000 times 32.5% to HM Revenue and Customs. Right? So in this case, this is the amount which company has to pay. And also because it is a benefit for Charlotte, which is 2.5% of the loan, that is benefit for the Charlotte. Now for the company's perspective, if the company is paying any benefits, company has to pay class 1 NI as well, class 1A NI as well. So the company will have to pay class 1A NI in this case as well. Right, so yeah, there will be two treatments. So for the Charlotte, if we talk about, I don't know what are the spellings. Let me see it. So it's SHARLTT. right? So for Charlotte, there will be 14,000 pounds times 2.5%. So that would be whatever the amount is. That will be the benefit, right? So that is the benefit, right? So whatever this amount is, that is the benefit for Charlotte, and Charlotte will have to pay income tax at the rate of 40% because she has already used the income tax basic rate band. And for Bamberg Limited, the consequences will be, because it is a closed company, and we'll have to write down that it is a closed company because closed company is a company which is owned by 5 or few shareholders. In this case, it is only owned by one shareholder, Charlotte. And whenever the closed company issues a loan to a participator, in this case Charlotte, then the company will have to pay 32.5% to the HM Revenue and Customs. So in this case, company will have to pay 14,000 pounds times 32.5%, whatever this amount is. That amount will be paid to HM Revenue and Customs, and the company will also have to pay the Class 1A and I as well, 1A and IC, and that would be I assume if it is Y, so we'll take Y times whatever the rate is, whatever the rate of 1A and IC is. So company will have to pay Class 1A and I on this amount as well, right? So this would be the impact on that. Right, so that was our closed companies. Please make sure you redo this question, and that's it, and I will see you in the next video lecture, and hopefully last video lecture of our corporation tax. I will see you in the next video then. Goodbye.